welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about homeowners insurance. And today I am joined by a special guest, Adam Smith, and he is with Brandt Insurance Agency. Now, one of the biggest things that people don't know when they're buying a home is part of your mortgage process involves the homeowners insurance. Now, the homeowners insurance is going to protect your home that you're going to buy. And we brought in an expert to talk about it. So you may not even know some of the questions that are going to be out there. So make sure that you answer anything or ask questions in the comments below for anything that we don't answer. But we're going to go ahead and bring in Adam, and let me have you introduce yourself.
Yeah. Hey, everybody. Sean, thanks for having me on. Adam Smith, insurance agent. I've been an agent since 2009. Born and raised in Louisville. But with Brandt Insurance, we can do business in Kentucky, Indiana, and Ohio, and are a full broker. So what that means to everybody that's not in the insurance world is we basically do the shopping for you. So companies like Nationwide, Travelers, Progressive, Allstate, and a list of others that we can make sure our members are getting the best product, best price, and kind of serving you really well, making sure that you get the product you deserve. So.
Awesome. Hey, and the idea of being a broker, so can you touch for a second the difference between being, I forget what you call this, what was it?
Yeah, there's exclusive agents, and then there's a broker or an independent agent. So for a long time, I was just an exclusive agent, which is great with one company, but it kind of just handcuffs you a little bit because you really have only one option to choose from. So from a customer standpoint, if your premiums go up from a claim or you have a problem, and if you're with an exclusive agent, you really only have that one option. They can't really do much for you except to say sorry and it is what it is and look for a little couple discounts. But as a broker, whether you're shopping for the first time to get a homeowner's insurance for a closing or at renewal, it allows you to really just open up that book and look for a lot of good options with many companies, and we'll help you choose the best one that's a good fit and that has good coverage, that's competitively priced. And go from there.
Yeah, and that was interesting because we're a broker too. So we have multiple lenders out there that we will shop around, and my mantra is always, how do we make your money work best for you? Right. So the question, and you had mentioned this off camera, but you have some systems, so like you can price all of them. Can you talk about that a little bit?
Yeah. So to get a quote, it's super easy. Somebody like Sean, if you're working with him, can work with me a little bit, and we can plug it in there with your permission. But if you call or email or text me directly, all we need is just a couple pieces of information, nothing too private, no socials really for the most part, and plug it in one time, and it rates with many different carriers all at once. So it's a really fast process. It doesn't take a lot of time, but it gives us a really good snapshot of all these different carriers, and we maybe see the top 2 or 3, and then we can talk to you guys about what's the best fit and the benefits of one company versus the other. Maybe one's priced differently. Some companies have different coverages than others. They're not all the same. So, but that's when you can have a trusted agent to kind of guide you along the process and point you in the right direction. So,
awesome.
Yeah.
So, for people who are thinking, okay, what is involved in an insurance quote? Do you have to pull credit, and does it cost anything to get a quote? Yeah. All that stuff.
Great question. So. It is totally free and really no obligation to buy, but a free quote to assess current coverage, and especially when you're getting a mortgage and doing a closing, like you said, the lower the cost, the better. So if we can lower your interest rate and your home insurance and get that, the better the rate long term for your buyers. It's no cost to get an insurance quote, and we really don't pull from a credit standpoint. We can run it with your socials. Sometimes that helps the rate, but we don't necessarily need that on the front end to get a quote. And it's a soft credit score, a soft like insurance score. So it's not going to affect the same as somebody goes out and buys a brand new boat, and then all of a sudden we can't close on the mortgage. So it's a soft pull that does not affect your credit long term.
So and that's really important. And we've talked about credit in the past. So if you have a credit inquiry, that impacts your credit score and impacts your FICO score. So when you're getting an insurance quote, it does not do that.
Right.
And that's the soft pull aspect of it.
Mm-hmm.
Okay, very good. So now you mentioned you were talking about pricing. We've talking about trying to find the best rate or whatever. But for me as a loan officer,
right.
something that's super important to me and I pass it off to my clients, and oftentimes I kind of, I deal with a lot of different places, so I get a good sense of, top-notch insurance agencies and companies. So there's other aspects to it other than just, hey, what is my policy? There's the service, how quickly, if I request a policy, can they get it to me quickly so that your closing can happen fast?
Right.
Accessibility, and do you have to go in person to hand sign the policy versus electronic? So, and honestly, that's one of the reasons that I brought Adam in here, is because he's one of the trusted agents, especially here in Louisville, who I know if I need a policy, he's going to get it to me, and that's important to the buyers. So can you talk a little bit about maybe, that accessibility, and what technology you might have, and why that's important?
Absolutely, especially in today's times where maybe some people aren't comfortable going into an office like they used to be.
Right,
we can
especially
do
with COVID.
Right, we can do everything electronically, like I said, via text or call. If you need to sign an application, we can do that electronically, which is really quick and easy. It's just a click of a button and you're done. But going back to one thing you said, it's not just price that really, it's a really good focal point, is to make sure you get a good price, but I always say there's product, price, and service. You need those three. And where one company is really, really cheap, they're probably skimming on the other two to make it that cheap.
Right.
You need a good combination of both, and especially with your local agency too, to provide that extra service. If you have a claim, are they going to show up? Can you reach somebody? You're going to be on hold with a 1-800 number forever.
Oh yeah.
So there's a lot of different things that go into home insurance on the buying side, and then also when you're a customer, how you get a hold of your agent and how easy it is to do business. So we try to make it as easy as possible.
Awesome. Yeah, very cool. Yeah, that's super important, because I mean, the whole point of the insurance, it's so when I'm doing my disclosures, it actually shows up on my disclosures as hazard insurance versus homeowners insurance, but we know it's homeowner insurance. But it kind of emphasizes the point that it protects you against hazards.
Right. Yeah.
So can you kind of cover? I mean, I know it probably covers a whole lot, but when I look at insurance policy, I'm like, I don't even know what I'm looking at half the time. As far as coverage is concerned, I go straight for what applies to the mortgages.
Right.
Can you talk about the insurance world and your thought process and coverage and how that what a buyer might be able to look for?
Yeah, and it's a good point. Sometimes it's called homeowners insurance, hazard insurance. I've seen people refer to it as fire insurance, but really that also covers a lot of different other things like wind and hail and water and theft and lots of different things. So really when you own a home, a lot of times that's going to be your biggest asset to protect. So you want to make sure that if something happens, like a tree falls in your house or if it catches fire, that you're protected for that, that you don't want to lose out on your biggest investment for you and your family. So we, as an agent, we can go through the different types of coverages and especially kind of go through what you want covered. You can have it as basic as possible or broaden it to be things like jewelry and gun collections and lots of different things that are important to you. But if something happens to that home, that we want to make sure to protect it well.
Okay, good. So what all should they be like? Is there anything that a consumer looking for homeowners insurance should be asking? Hey, what should I be covered for?
Yeah, so if you buy a home, you always want to make sure your insurance is the same amount or more than what you bought the house for or what the loan is for. And a lot of times you're not even going to be able to close on the house unless you say you bought the house for $100,000, for sake of example. You have to have $100,000 of insurance to even get the house, to even close, more times than not. Am I right?
Yeah.
Right. So.
Yeah, we focus on particularly on the loan amount.
The loan amount.
The
right.
loan amount.
Yeah,
right.
We always want to make sure that's covered, but
because from the lender side, they're ensuring that they're protected for their investment. Because when you buy a home, let's say you bought $200,000 home, and you put 20% down on it, so you're talking $160,000 loan. When you have a $160,000 loan, they want to insure, because the lender actually is on the hook for the $160,000. So if anything were to happen to your home, they want to ensure that is covered. So that's kind of the idea of ensuring that at least the loan amount is covered in the insurance.
Yeah.
But there's another aspect to it as well, and that is it was the rebuild cost, or what do you call that?
Yeah, that's what I was going to touch base on next, is that what it takes to buy a house and get a loan for a house, and maybe what it takes to rebuild a house could be all three different numbers. They should be around pretty close, but that's where, as an agent, we want to make sure not only to protect what the loan amount is for, but what it takes to rebuild it in today's world. And that number could change over the course of the years as inflation goes up and labor and material costs change. We will always want to make sure to do a full rebuild on the house. If it's a total loss tomorrow, what do we need to have in place to protect that you can rebuild? Not put 3 walls on, but put 4 walls in and make sure you get back right where you were and not leave you hanging. So
you brought something up right there that I had a question of, and a lot of people don't necessarily think about that, but after you, because like for me, it's about, hey, establishing the insurance policy, get it in, it's in underwriting, the whole loan process. But once somebody closes on a home, the insurance, like conceptually, you're with them, for the life of the home, essentially. So ideally, do you have some type of review process, or if things change, how's that work?
Yeah, great question. We love to do that at least once a year. We like to try to touch base with our members every renewal, just to see if things change, because life changes. People have kids, people put additions on their house, finished basements. So, sometimes you just set the home insurance and people keep it the way it is for 20 years. But a lot of times things change and we can adjust the policy and make sure to put the water coverage for the basement if you finish the basement, or make sure that new deck is covered correctly. But we always want to make sure to touch base with you once a year, check in, see if you added anything, wanted to review coverage, and we can change the insurance policy at the renewals every year or 2 days in after you close. It's really pretty fluid. You're not locked in per se to a whole year and then you can't change it forever. You can add, remove, or adjust whenever we need to. So
now that's huge. Yeah. That's a big, and I'm not condoning that you do this. However, homeowners insurance also involves your closing costs, because it's called a prepaid. So you're going to be paying 1 year of homeowners insurance up front and establishing your escrows. And you can check the video out here. Okay. Now the question for you is, if somebody gets into, if cash to close is a potential issue, and they bring in a deductible and some other items after closing in order to get, kind of reduce the initial cost of the insurance.
Right, yeah.
And then after closing, how's that work?
Yeah. In rare circumstances, we can see that where, just like anything, if you raise your deductible, it's going to lower your cost. So sometimes if we need to meet something so you can close in the house, we can, show you your options and let you choose if it makes sense for you to say, what if we raise that deductible here? It's going to lower the cost and we're able to close. And then the very next, day, week, month, year, you can change that back to whatever you want, are comfortable with from a deductible standpoint, from a coverage standpoint. But it's very fluid, and we're able to accommodate your requests and even work with the lending side of things to make sure it fits and you get exactly what you need and you're able to close.
So if somebody did that, if somebody got in and then afterwards they realized, okay, hey, I actually want to have either less of a deductible or change coverage or whatever the case may be, do you reach out to the lender and adjust the escrows, or are the escrows wherever they were established originally?
A lot of times it's where it's established originally. So if we had a policy that's $1,000 a year, just for sake of example, and we close with that, but then we lower your deductible and it raises up to $1,500 a year. Usually that difference is going to come directly to you, the customer, and you can pay that, but then the following year it'll get rolled into the escrow. So year one, if it's changed really quickly, that difference will probably be going to the customer. But then the mortgage company and the escrow account will see that the policy's changed, and they'll usually calculate that in for the years following. Is what I've noticed. So.
Yes. All right. So super important. All right. So if you do find yourself having a for lack of a better term, a cheaper insurance coverage when you close the home and then you increase the coverage, which increases the policy, your initial escrows are going to be established off of your initial declarations page, which is your initial policy, so that your monthly payment is going to be 1/12 of that, right? So they're going to take your monthly policy, divide it by 12, and that's how they're building your escrows. So you pay 1 year of homeowner insurance up front, but then every month when you make your payment, they're taking 1/12 of that policy out of your monthly payment and putting it into an escrow account, a savings account at the end of the year. So the anniversary of when you close on your home, they are going to then pay your homeowner's insurance for you. Now, if you raise your policy amount, there's not going to be enough in your escrow account. So that means that they're going to have an escrow shortage. They're going to pay the account to make sure that you still have homeowner insurance, and then they're going to come back to you, the loan servicer will, and say, hey, you had an escrow shortage. You can either bring it up to the amount that it needs to be by giving additional money, and they're going to increase your monthly payment. So keep that in mind. All right?
Yeah.
Okay. All right. Why is it cheaper or is it recommended to bundle your auto policy and your homeowner's insurance? And maybe touch on, because we're focused on homeowner's insurance, are most insurance agents kind of specialists in both auto and home, so that people don't think, well, they're a homeowner insurance person, I don't want to bring my auto to them?
Yeah, great question. So our office can do a lot of different products like home, auto, life insurance, business. So, the more you have with one company, say this company is Nationwide, for example, the more you put with them with the home and auto, the better the bundle discount can be. So more times than not, it's going to be beneficial to keep those two together, specifically the home and the auto insurance. And even if you add some more products like boats or life insurance, it can even improve even more. But those are the two keys. A lot of companies will give you anywhere from a 10 all the way up to 30, sometimes 40% discount just by having those two put together. So those are really important to try to bundle. Some customers, it makes sense to do home over here and auto over here, just from having a lot of different options to choose from. But more times than not, it's in your best interest to keep those two together. So
okay.
Yeah.
So on that line, with different prices, different places, why are insurance policies so different from one company to the next company? And people can shop around, and that's another reason, like I get to see different kind of pricing, which is another reason why we like to partner up with people who, again, help people make their money work best for them. So why is it so different? And maybe this is a two-part question, but I've noticed that it can depend by zip code. Like,
it really can.
Where the house is by the zip code can drastically change the cost of insurance.
Yeah. So insurance is all about risk, right? That the insurance company is basically taking on your risk of protecting your assets, whether it's your car, a house. So, and different zip codes might have different, fire departments that are close to it, theft rates that are higher in one area versus the other. So a lot of different things that go into a rate. But that's why I love being a broker so far, is if we have a lot of different companies to choose from, and a lot of different companies that like this risk over here and don't like this area of the state or the country, that we can figure out which ones are the best fit for you and where your home is and what you're protecting.
Okay. Now, something else that pops up from time to time is flood insurance. All right. So if you're in a position where you have to get flood insurance, how does that work? Is my understanding is that flood insurance it's FEMA, so it's pretty much the same across the board. Mm-hmm. But people will call for flood insurance and get different quotes. So what's really happening there?
Yeah, most of the time it's pretty regulated and the same for the most part when it comes from FEMA and flood insurance. Home insurance can differ from company to company, but there's only a handful of places that you can go to get flood insurance from. And a lot of times your lender and the realtor will let you know that it's required to carry flood insurance. But I guess, first of all, flood insurance is a lot of times confused with just water coverage. If I get water in my basement, do I need flood insurance?
Right.
But two totally different things. And water can get in the basement 1,000 different ways. It could be a leak, a bursted pipe, a water backup issue, a flood. So maybe just having if you look on your declaration page, water backup coverage, that's not flood insurance. They're two separate things. So flood insurance is water coming up from the ground, rising up from an exterior, coming inside the house, not inside pipes or anything like that, like rising water that's affecting 2 or more homes adjacent to each other or 2 acres of land. That's kind of how they categorize it. Okay. But a lot of times it's going to be roughly the same cost. And just like, home insurance, you can change your deductible to kind of keep that cost down. But a lot of times your lender will let you know if it's required. So that's why before you even buy a house, you might even know, is this going to be required? Am I going to have to do home and flood insurance, which would almost double the cost of what your having to put up or what the insurance lender is going to look at.
It's caught in a couple different ways, but even if we don't catch it up front, or if they don't know it's in flood insurance, part of the underwriting process is they're going to check to see if you're in a flood zone. And if you are, they're going to require flood insurance, and that's how you can go into that. Now, you mentioned something about the difference between flood insurance versus, did you call it water backup?
Right.
Water
those two are confused quite a bit.
Okay, so on that note, two things. One, and you also mentioned the declarations page, and I mentioned it as well. Can you just define a declarations page real quick so we get context for it? And then, what do people kind of often miss out on their insurance policy that they should specifically be looking for?
Yeah. So every year when you first buy the policy, or every year it renews, usually annually, you get a big packet. It might be about that thick, a lot of different pages, but a lot of times the first 2 or 3 pages are what you need, and they refer to that as the declaration page. It just covers through what the dates the policy starts, the address, the home, some different endorsement coverages you have on there. But that's kind of what you need, and what I would suggest to put in a lockbox along with your other valuable documents like your closing things and tax documents. That just keep that handy so that way you know what you're covered for. But it's always good to keep that handy, definitely.
Awesome.
Yeah.
Okay. All right. And what specifically should they be looking for maybe in the policies that are?
Yeah, so one big key is making sure that you have the right dwelling coverage. A lot of times that's coverage A. That's the part we were talking about. The first part of the video is making sure that you have enough. You don't want too little, and you definitely don't want too much and you're overpaying. You want to make sure your dwelling coverage is right where it needs to be. And that's where having an experienced agent to look at that and make sure that's right over the course of time, because that could change, is accurate. Water backup coverage is huge. Whether it's different than flood, remember, but water backup, I always recommend. I'd say 99% of the people I work with have water backup coverage, because it can affect the basement, the first floor, the second floor, you name it. That water backup coverage is very important. And usually a limit of 10,000 is where I like to start there. And the third thing is making sure it's replacement cost policy. Sometimes you can't even close on the loan unless it's a replacement cost policy. The other one is actual cash value, which depreciates things and gives you a lesser payout if you have a claim. So you always want to make sure you have replacement cost on the home, and also your contents as well is what I would suggest. The last thing that's required on any policy is liability coverage, which is similar to your auto insurance. You have somebody trips and falls and gets injured and you're to blame. Your home insurance has liability. So anywhere from 100 all the way up to 500, sometimes even more, to protect you in the case of a liability claim.
Okay.
Yeah.
Awesome. Man, thank you so much for being on the channel and for
wonderful.
Sharing that with the viewers. Is there anything that maybe we haven't covered that you wanted to point out for insurance?
Well, maybe one question that you can answer for your followers is from a lender standpoint, what's important for you? Is it quickness? Is it as far as getting the policy as quick as possible, or the price, or is it a whole bunch of different things that
Yeah, good question. So for me, what makes a good insurance partner is, of course, taking care of the client. So we've got to have a rate that will allow you to have hopefully the lowest payment possible, as well as the impact it has to your cash to close, because obviously the lower the policy, the less you have for cash to close. Mm-hmm. Now when I do my quotes, I tend to overestimate. So I give a worst case scenario. And it's just years of experience of knowing where kind of policies will fall. Mm-hmm. But I'll get a policy, I'm like, whoa. And normally I can say, that's a good policy, and for me it's a no-brainer. But I can't tell you by law, you have to use this insurance agent or this particular quote. You can shop around. But I know just in general, just from experience, kind of where things will fall. Having said that, the follow-on to that, and this is my pain point, is once you've decided, say, I want to go with XYZ insurance agency. When we order that, because what happens is you get the selection and we have to order it because we're sending a mortgagee clause and closing dates, other things that they need in order to build the policy. And when that happens, sometimes we don't get anything. And I'll tell you what drives me nuts. This drives me nuts. And there's certain companies that I won't name that will do this, is we will request it and they'll say, cool, and they get everything going, and there's just silence. There's nothing. And you're like,
it delays you.
Yeah, it delays us, and we're waiting on that policy because that policy has to go to underwriting, and it is underwritten as part of your loan process. So until we get it, you can't get it clear to close. because they have to have the policy, ensure it has the coverage, and ensure that, and those numbers actually go into your cash to close. So they have to know all that. So when we don't hear anything back, it's like, what's going on? Well, there's something called finalizing a policy. And some won't reach out and say, hey, we have everything that you need. Please finalize the policy. Whether it's a signature or whatever the case may be, it'll just be silence. Now, I've learned over time, if we don't hear anything back, I will typically call up the buyer and say, hey, call up the insurance folks and tell them that you're going to finalize the policy. Because if you don't do that, they don't respond.
Yeah,
and I've never understood that.
Yeah.
And then there's others where, like with your company, if we send you something there, then it just magically shows up. It's done. Here it is. Boom. We move forward. It's easy. And that's key to me, because if that doesn't happen, it holds up the entire loan process.
Yeah.
So you can tell it's a little bit of a pet peeve of mine. So good insurance agencies will provide that, and obviously I appreciate how you do that, and that's one of the big things for me.
Well, likewise, you try to make it as easy as possible for your buyers and your clients to just get a loan, and we try to make it as easy as possible, as quick as possible, to just do the insurance, because that's the last thing you really want to think of. You're trying to buy the house, move in, hire movers, and paint, and do a lot of different things. Insurance a lot of times can be the last thing on your mind. So we'll try to make it as easy as possible. I do a ton of communication just via text. So you can't text a 1-800 number with a company who knows where. But members can text me, text Sean, email, stop by, call, and we'll make sure to make it quick, easy, simple, and get you what you need.
Yeah, so and when I'm looking at that, like the ease of use in the beginning, in my mind, and maybe I'm being unfair to some agents, but if it's difficult to set up and establish a policy, if something were to happen, how difficult is it to actually get a claim in there? And maybe the two aren't related, but that's just my thought process.
You nailed it. It is related. So, if you're getting great service and treated with respect on the front end, it's usually going to be that way on the back end too. So, but if it's hard to get a hold of somebody and they're dragging their feet and maybe not doing a good job getting the coverage you need, kind of have to cross your fingers and hope that you get it. So,
all right.
Yeah.
Okay, awesome. Well, again, thank you so much for being on the channel. And
thank you for allowing me to be here.
Absolutely. So if you guys have any questions at all for Adam, leave the comments below, and then we'll keep track of it, and we'll make sure that he can reach back out and answer those questions. And thank you so much for watching. And as always, it's all for one and one for all.
See you guys later.